I think a lot of people over time have asked me how I look at investments, and it's definitely changed over time. But the easiest way to look at it now is the stock market trades at 18 times earnings. And when you have growth-based businesses like Apple, Amazon, Facebook, Google, they trade at 30 times and 40 times earnings. Why is that? Because their business model is more successful. It has longer sustainability than maybe the S&P 500. You look more towards value type businesses. Those companies trade at 11 times, 12 times, 13 times earnings. And the reason for it is like those are 3-generation businesses and they don't have the same business model. They're more mature in earnings. Their sales are more lackluster. Their growth is not as robust as those growth-oriented businesses. Another thing to be thinking about is these things have liquidity premiums. And what does that mean? It means that all market participants can buy or sell something at a moment of time. When you think about private-oriented companies, these things trade at much less price earnings multiples. Think about like McDonald's stock and its price earnings versus actually buying a McDonald's for $3 or $5 million. So what is the price of earnings on a McDonald's? Maybe that's 3 times or 5 times. When you think about normal businesses like the accounting firm and the legal firm and the car wash and the storage facility a few miles away, these things don't have those brands, right? If you have $1 million in profits, many times what you really have is a job for yourself, and it's a good job. I think when it is above $1 million, then you start seeing mid-major players wanting to buy your company. And that's exactly what I do. So basically what I'm doing on private equity, right? Like I'm buying a lot of those mom and pops that are 1 times, 2 times, maybe 3 times price earnings multiples. I'm gobbling them up together. I can go to another mid-major player or institution or a real estate investment trust and say, here are these 6 assets in Charlotte, North Carolina. So overall, like I think about this, think about like a bell curve, right? The bottom of the bell curve might be mom and pop businesses that are just poorly run by some retiree that kids don't want to run anymore. So what I do, I purchase it towards the bottom end of this bell curve, and I look at business efficiencies of increasing revenue through construction and technology and building out marketing and CRM system and a website and auto pay. And I'm getting these things through much higher revenue towards the top end of the bell curve. Think about that as like a growth-oriented stock, right? Once it gets to the top end of the bell curve, we're looking to sell it. We're not trying to own this thing forever. What's going to happen is it's going to reach the bell curve. It's going to do the top end of the bell curve, and it's going to start depreciating just like all real estate does over time. So what we're trying to do is sell as it hits like the top end of that bell curve. And what we're trying to do is sell it to a core asset player. Overall, like I think that investing in like the era that we're in right now is very different than what it was pre-COVID. So right now, we had COVID, we had a huge stimulus, we had inflation and high interest rates, and now we're in this era of a high interest rate environment. You add into it like the geopolitics of the time. I think essentially what we have to be thinking about for the next several years is if you're just doing kind of like more lackluster, core, common type of investments, I think you're going to get more lackluster core types of returns. So, what I've always been thinking about is like, if you do what everybody else does, you're going to get what everybody else has got. I'm trying to create something that is more of like a monster type of business. And with each project that we do, think about it as economies of scale, right? So every business that we create, we're able to build out more and more systems, more and more efficiencies, which builds out that flywheel approach of like more for the investor, more economies of scale, more volume, more products to do. We're on all the social media channels. It's @PTrainer, and the podcast is Banana King. And of course, Gamma Income is a project that's getting all the stuff done. So I really appreciate you guys taking some time, and I hope this was helpful for you guys too.